Hello, everybody. This is Alexander Green. I'm the Chief Investment Strategist of the Oxford Club. And there are a lot of people right now who are asking, what's happening in the market? Why is it happening? And what should I do with my money? Because the coronavirus is something that no one has ever experienced before. Even the Spanish flu, which killed millions a century ago, no one alive now has any recollection of that. So people are understandably concerned about how they should treat this. And I think most people watching are aware of what has happened generally as the virus has spread from China and through Asia and over the United States and around the world. The markets took it very badly because as people began social distancing and self-quarantining and sheltering in place, that meant they weren't going out. They weren't meeting, they weren't traveling, they weren't shopping, and that's obviously very bad for business. And the stock market, which is a leading indicator, began dropping even before that became apparent in stores and at business establishments. And so we had this ferocious bear market, the fastest bear market in history, beginning in mid-February and ending, we hope, in mid-March. And since then, there's been a terrific bounce and not a lot of volatility. And everyone's wondering what lies ahead. Well, the short answer is no one knows. But that doesn't mean you have to guess. You don't have to guess that the market's going to go straight up or it's going to go right back down. What you need to do as an investor is not to follow someone's predictions, but to follow the right principles. The principles of investment are well known, well understood, but not by everybody. And so what Oxfordians have been doing, Oxford Club members who follow my investment advice and recommendations, is first of all, they have been spreading their risk outside of the stock market. We own high grade bonds, we own high yield bonds, we own inflation adjusted treasuries, and we even have a small portion in gold related equities because gold mining shares tend to go up when the broad market is going down, or at least they go down less. So that type of diversification works. The other thing that we're doing is we're sticking to just high quality companies. You know, it's great that if a company's making a lot of money, but if they're making a lot of money only because the economy is good, and they have a lot of debt they have to service, and now all of a sudden the money's not coming in, that's a very tough position to be in. So it's not just a matter of how strong are sales and how good are earnings, but how solid is the balance sheet, because you don't want a highly leveraged business that has a huge debt service and isn't able to cover it. That puts the very future of the business at risk. And another thing that we're doing is we're running what we call trailing stops behind each of our individual stock positions. And that means as long as the stock keeps going up, we're happy to hang in there and be a shareholder. But once it plateaus and starts coming down, we're automatically knocked out of the stock, whether it's protecting profits or cutting losses. And that protects our profits in the good times and it protects our capital in the bad times. So those various investment approaches, asset allocating, diversifying into quality, and running trailing stops protects us in good times and bads. And of course, there are lots of opportunities out there right now. Stocks are so much cheaper than they were just a few weeks ago. And again, I'm looking for companies that will prosper despite the coronavirus. Remember, this is not going to last forever. A few more weeks. We don't know how quickly customers will come back to stores and restaurants and hotels. But some companies are a lot more predictable than others. Utilities are obviously very safe. Food companies, pretty safe. Healthcare companies, also safe. Defense contractors, other companies that are recession-resistant businesses, they're in good shape. I'm also looking at what the insiders are buying. If the people who run a company, the officers and directors, like the CEO and the president, the chairman, are buying millions of dollars worth of their own company stock with their own money at the current price, that's a very positive signal because let's face it, they know about the coronavirus. They know how it's going to affect the economy. They know very much how it's going to affect their business. And if they're still buying shares with their own money, it's a very positive signal. So there are lots of things you can do to protect yourself. There are lots of things you can do to take advantage of opportunities in today's market. And that's what the Oxford Club is really all about, showing you how to both prosper and protect what you've earned, what you've saved and invested over the years through our proven investment principles. So again, happy to talk to you more, but for now I'm signing off. This is Alexander Green, Chief Investment Strategist with the Oxford Club.